me, so you'll likely not see me. So I'll keep it off because that's easier. I'm Zila Malia, Manager Risk and Resilience, and Elias and I will be taking you through this session. Basically, we'll just take you through innovating for scale. This means different things to different organizations, and we'll just quickly take you through what it means for us as FSD Africa, what scale looks like, and as an organization, what scale is. And then Elias will take over from that, and he'll take you through the different aspects of innovating for scale. So Elias, would you like to just say hi so that we can go on?
Just proceed, Zila. I'll just take it from when I'll be going through the slide. Thanks.
Okay, perfect. So so I'll just quickly take you through who we are and what we do. As an organization, we work to reduce poverty by strengthening Africa's financial markets. So Elias and I are part of a risk and resilience team that is specifically focusing on insurance, and hence the InnoLab, whereby we are talking about insurtechs. But part of our work includes, other part of the whole financial sector, including working with capital markets, accelerating or catalyzing funding into different projects within the continent. So just regulatory work in insurance, but also in capital markets. So we look at different aspects, but we also have an investment team that does lots of investments, more of impact investing in projects or in organizations that would achieve impact according to our definition of impact. And I'll take you through what impact is for us as an organization. And we believe healthy financial markets are the foundation of a fair and thriving economy, and that's the only way we actually get the money in Africa. Ghana is one of our priority countries, so we have a number of projects ongoing there, including the InnoLab project that we are currently implementing. So we are based in Nairobi. We are a team of around 65 financial sector specialists, from capital markets, investments, innovation, that's digital economy. We're part of a bigger team. So us in risk and resilience, as I mentioned, you're specifically focusing on insurance and de-risking investments into the markets. So what do we focus on? I mentioned the different pillars. So we have capital markets, we have risk and resilience, we have digital economy, we have the investment arm, and we have the transaction accelerator. We use different tools that includes returnable grants and grants, investment capital, technical assistance. So after this program, we might be working with some of you on using different tools. It depends on what the company need is, and we would have to do an assessment for us to actually get to understand that. Our key outputs, we are keen on innovative financial products, hence our support to the InnoLab project, development of new policy and regulations. We are working with the regulator as well on this, so we are keen to see a part of this project, but also part of other projects that we are currently implementing on regulation in risk, but also in capital markets, if we can also get new policies that actually support the financial sector. Then there's market infrastructure development and increased capacity and collaboration. We try, based on the need of the different companies and the different markets that we are working in, we support with technical assistance and capacity building, but it depends on the need of the market. We have specific outcomes, and as I mentioned, scale means different things to each organization, and this is where we get to talk about what scale means for us as FSD Africa and what we aspire to see in the different investments or projects that we invest in. This these are specific to different projects, but this is just a generic theory of change for us as an organization. So we would like to see deeper and more sophisticated domestic capital markets, increased financing to green finance, insurance industry, healthcare, digital economy, more transactions into the market. So that could be through crowding in other investors into investments in Africa. That could be through de-risking investments, so providing insurance for bigger investments in green, or maybe supporting MSMEs, or just different priority areas for the organization. Involve transparency and pricing and understanding risk management strategies and more effective policy and regulatory environment. So that's just more of an intermediate in the short term. In the longer term, we would like to see improved climate change adaptation and mitigation. So this is part of our regulatory work and innovation work, but we are also focusing quite a lot on climate finance and climate resilience within the pillar, but also as an organization. We would like to see increased employment and income generation opportunities, increased resilience to financial shocks, increased access to finance, and that's for public and private sector, increased resilience of MSMEs and low-income populations. We're very keen on the underserved and unserved, and for you to be selected to join this accelerator program, you went through a criteria, and at least that criteria was also based on some of these things that I'm actually talking about. So in the longer term, we would like to see a sustainable future, and we say we've succeeded if the projects that we are currently implementing right now do not affect the future generations. For example, you might come up with a credit product. It's an innovative product, but actually it ends up putting people in so much debt that it affects their future generations. So that would not be a sustainable future for us, and that would not be success for us. So we would like to see that the opportunities that people are getting today don't affect future generations. When you look at natural capital, the different things that we are doing in our continent, including farming, including exploration of minerals and all that, don't affect the future generations. And as you know, Africa is highly dependent on natural capital. So looking at all these aspects within the sustainable futures, so looking at the environmental aspect, the social aspect, making sure that within our projects we consider equity, not just gender, but equity in terms of even the countries you're working in, even the populations you're actually working in, making sure that we involve not only, for example, people in urban population, but also people in rural population, people who are underserved and unserved, just making sure that opportunities reach different people and there's diversity in terms of reach from our projects, and fragility and vulnerability are addressed. I would say out of the 40 countries that are highly vulnerable, for example, from climate change, 30 of them are actually in sub-Saharan Africa. So when you talk of fragility, this takes us back to our climate resilience strategy within the organization. So this is very important for us, because if you don't deal with the climate issue and the natural capital issue within Africa, then that means in the next 30 years, our GDP will have reduced. And I was going through a report by UNECA, and the report was saying that if we continue with the trajectory that we are continuing on in regards to temperature increase, at the moment we are actually at 1.2 degrees above pre-industrial temperatures. If we continue in that trajectory, in the next 30 years, Africa's GDP will reduce by at least 30%. And that's because we are the most affected, and we are also quite dependent on natural capital as a continent. So what is scale? And scale means different things to different people. As an organization, as a development arm, we do quite a lot. Us is mostly on impact investment. So we have grants, we have returnable grants, we have investments either through debt or different asset classes. That could be debt, that could be equity, with very good rates, because Scale for us is reaching our target populations and actually achieving our goal, which is creating a sustainable future for Africa. But that's different for you because you have a bottom line that you're actually looking at. So it could be scale, could be reaching more customers, making your processes more efficient, being able to actually fundraise and get more capital. So it depends on what the organization's target and aspirations are, and we cannot talk about scale and put it in one box and say this is what scale means. We have to take into consideration where the company is at and what the needs of the company are. So a company might be actually very well funded, but they're not actually able to reach the customers that they would like to reach. So will we say that they've scaled? The answer would definitely be no. So so scale means different things to different companies depending on where you are as a company and what your need is as a company. And I would like to play this video pretty quickly before I move on with my presentation. Please let me know if you can hear. Can you hear?
You scale by repeating whatever it is that is working to generate revenue. If inside sales is what's working, hire another rep. If Google AdWords and content marketing is what's working, spend more dollars on Google Ads. Simply put, repetition is the opposite of experimentation. You're no longer in experiment mode, where you're trying to find out something that works. You've found something that works, and now your objective is to repeat it as quickly and as efficiently and as often as possible to grow your top line. I think being ready to scale starts with the founder. If all the founder wanted to do was to solve a complex engineering problem, well, that problem's already solved. A founder who wants to scale is a founder who doesn't just want to build a product. If all the founder wants to get that product in the hands of customers, wants to see them use it, wants to get feedback, and wants to solve their problem, and by doing that, build a big company, there's a huge amount of change involved in going from being a technical founder pre-revenue to being the leader of a $10, $50, or $100 million revenue company. But the best founders want to do it because the best technologists want to do it. Because if all you do is build your technology and it stays idle, you haven't made a difference. Great founders want to build, and as Steve Jobs say, great founders want to ship. As you think about growing your business, and in particular how quickly you should grow, my strong advice is don't let the financial markets be the primary driver of what you choose to do. Dare I say it, don't even let your greed or your ambition be the primary driver of what you choose to do. The number one thing you should focus on is what are the needs of your customers? How quickly are potential customers starting to adopt the product? And ask yourself the hard question is, do you have time to wait? Or will other companies fill the void if you don't grow quickly enough to satisfy your customers' needs? What we've seen over and over again in our companies is that financially driven models and spreadsheet driven models of what you're going to do generally very quickly give way to the two eternal constraints. How quickly or slowly will customers adopt your product? And how quickly or slowly can you hire the people to meet that need? It's generally your ability to hire and your ability to grow and satisfy customers that determine how quickly you grow at the scaling stage.
So we've just seen what scale means to different people, and I think we all want to reach our target customers for the different products that we have, and we have to think about what will get us there. And we pursue scale for different reasons. For most of us, we want to reach more people. For some of us, we want to have economies of scale. For some of us, we want to be more sustainable or have a greater impact on low-income communities. And for example, the greater impact on low-income communities, that's what as an organization, FSD Africa, we aspire to do. So scale means different things to different organizations. And I'm going to quickly take you through innovation to scale from my perspective. So we all start with an idea, and all of us are past this stage. We've experimented, we've replicated, and we've used best practice. Now, based on what we just had, best practice should actually lead you to scale. right? Repeating what is working for your organization over and over again. But for that to be sustainable, there's a better model. You need to standardize, you need to build the infrastructure, because you want your business to stand the test of time. You want your business to stand, competition. You want your business to have a very good foundation. So you standardize, you build infrastructure, and have a wide scale rollout. That's where you end up reaching more people. I know it's not as simple as it sounds. You are the founders, you are the innovators, you understand your markets the best way possible. We are not in those markets, so we don't understand them as you do. But the keys to scale lie in these three: standardization, infrastructure building, and wide-scale rollout. We need to understand what's working for you, what's the best practice, and do it over and over and over again. When doing it over and over again, because that's what's working for your market and that's what's working for your clientele and your customers, then standardization and doing it repetitively then helps you scale, helps you reach more people, because that's what has been working. There are some ideas that have worked very well in one country. And for example, I'll give you, the mobile wallet, M-Pesa, that most of us use in Kenya. That worked very well in Kenya. That works very well in Tanzania, not as well as it works in Kenya. But Europe has tried using that model to, well, we know they are actually included, unlike our continent here. But they've tried using that model and it has not worked as well as it has worked here in Africa. And there are different reasons that that's the case. So keys to scale is not just about this has worked in another market, let's do it, probably it will work. It's actually understanding what's the best practice for you as an organization and for you and for your clientele and for your customers, then actually standardizing that and building on that to actually scale. So I just wanted to take you through the basics and that just in a nutshell what scale means and how scale can be different for different organizations. And then Elias will now get into the detail and we'll take you through the different aspects of innovating for scale. And yeah, I'll just like to welcome Elias to take you through the next part of the session. Thank you. Are you guys still there, or was I on mute all through?
Hello, guys. Hello. Is there somebody in the room?
Yes. Yeah, of course, everybody's.
Hi, everyone.
Hello.
Hello.
Hi, yes,
I just wanted to get to here. So I don't know which guys are in the room. So maybe I can start with Achille Sime. And maybe just kind of from his own view, what do you think of, if somebody talks to you about scale, what comes through your mind? Maybe Achille?
Yes, good afternoon, everybody. Sorry, I sneaked into this meeting. I'm from InnoLab, Nigeria, but I had an invitation from LinkedIn. When somebody talks to me about scaling, what comes to my mind is having a product and wanting to reach out to more, with the implications that you might need some more resources. But what comes to my mind directly in terms of scaling is the ability, being ready to reach out to more, being ready to get the product out and reach out to more people.
Okay, fine. So to you, it's ideally reach in terms of more numbers, more people. Let me check on another person that I need to call out. Linda. No, not Linda. Doreen.
Yeah, I think I would agree very much also with what was in the presentation. First thing that comes to mind is that this happens after you've found kind of product market fit. You know that your product is something that your customer wants. You know which customer segment to focus on, and you've hired or are in the process of hiring more people to do the same thing on a larger scale. That's how I would summarize it.
Ato? Ato kwa Mena.
So Pamela. Okay, all right. So I think I'll second to what Doreen just said. So scale is basically trying to replicate what has worked for you initially on a small market to a larger market. This usually involves leveraging. Sometimes it involves leveraging technology, to reach, a larger audience, and it involves more capital too. Sometimes it's scaling. It involves marketing campaigns and all the other stuff.
Great. I don't know which other guys we are missing, but ideally, scale can mean so many different things, and it has been well highlighted on the previous presentation. And whenever we talk about scale, the opposite of scale is failure, and most of the time, I usually say it's sometimes good to fail, particularly when when you're talking about innovation. And the reason why I'm saying that is that I did initiate an idea some time back, something that I tried to do, and it didn't really do well, and I kind of abandoned it, and started other things. So it's important to also ask yourself, is this thing working or is it not working? But I wanted just then to talk about innovating to scale, as Zila had mentioned. I work for FSD Africa as a senior manager in charge of risk regulations, and basically when I talk about innovating from an insurance perspective, then what comes into my mind is looking at how then do you create a future, and what needs to run in our minds as innovators within the insurance sector is that we kind of need to subdivide the insurance office into 3 levels, because at each and every level, you'll either engage a customer, engage a business process, and even just engage the resources that you need to utilize within your business. So kind of think about an office perspective, and you can divide an office in 3 levels: a front office, a middle office, and the back office. And if you look at the current insurance space, there's a lot of work that have already been done, I would say, on the front office side. And ideally, you look at companies, different insurance companies' growth strategy, you look at their marketing strategy, they're huge. And one of the key things that maybe we might not be aware of as we are in this particular discussion is that insurance companies do put a lot of money in terms of marketing. In fact, the highest paid people within an insurance office are marketers, the people that do for them marketing. So if you get a marketing manager within an insurance company, they are one of the highest paid. In fact, it's quite weird that I can tell you that most of the time they are paid more than the CEOs of the insurance companies in terms of the amount of money they get, including the other bonuses. So if you kind of look at this and ask yourself, where should I create a future for the industry? There's a lot of work that is being done on growth strategy. There's a lot of work that is being done on marketing. There's a lot of work that currently products are being created. And in fact, it is very difficult even to really demarcate a product that is currently being sold by an insurtech, and even the ones that are currently being sold by the incumbent companies. There is a very thin line in terms of what they tend to offer, including the level of flexibility. In terms of sales and distribution, the still same ways of distribution is still being applied, particularly within the insurance industry. Now, maybe just to ask ourselves, if most of us that are in this particular InnoLab cohort there are a number of people that are dealing with different aspects of the front office. And the key question that we might need to ask ourselves, out of those areas that I've mentioned, what am I focusing on? But there are two other levels that we haven't seen significant push, and those are the areas that I've kind of marked in, I would say that's maroon or red. I'm not very good in colors, but forgive me. So there's areas around innovation, around channels. There's a very, we haven't really put a lot in terms of innovating around issues around the sales, the products, the growth strategy, and marketing. And even looking forward is that companies have not put much around innovation. At the same time, the channels are still the traditional channels of distribution, and there's need to think about alternative channels of distribution, particularly within the insurance setting. And so basically what I'm saying is that if somebody wants to create their future, the two key areas that they should focus on highly is around innovation and channels. Now, if it comes to the middle office, this is where the insurance industry has failed completely. And I give it an analogy whereby somebody goes and purchases an insurance cover. Once you've purchased your insurance cover, it seems like your contract with the company ends, and you become a different person altogether, because you turn from a policy holder to a claimant. Immediately you start looking for any compensation from insurance company. Your name changes. You're no longer a customer, but once you go into that office, you'll be called, there's a claimant that is waiting at the reception. It's not that there's a customer or there's a policy holder that we sold a policy to a couple of months ago. And why is that? Because the middle office is something that has never been shifted, has never moved, and has never gained relevant traction that needs to be done around the future that we need to create for the industry. So for instance, the operations are still the same. If a claim is supposed to take 50 days or 90 days, the company will even strive to take it over to 180 days, because that is how then the performance indicator of somebody that is dealing with the claims is set. He wants to, as much as possible, not to pay as many claims as possible. And even the ones that are genuine, you'll definitely want to reject them. Issues around technology, a lot of information is still held on a cake format. So for instance, there are so many companies currently in different parts of Africa that in case somebody claims, or in case a claimant or a customer maybe has passed on, or there's need to trace that particular customer with his benefit or something like that, it becomes very, very difficult to trace. So technology has been an area that has not have not been applied on the middle office, and that's why when information go, you are always required to give loads and loads of information, regardless of the amount of claim that is supposed to be paid to that particular person. Then if you look at the back office, some areas haven't really seen a lot of traction, particularly on underwriting and risk management. And the reason I'm saying that, if today somebody comes to you and say, okay, fine, as an insurtech, I want to increase my premium, say by 20%, because maybe I just got a promotion. The key thing that somebody will tell you is that, look, we need to give you another policy, but we cannot upgrade your policy. Totally different when somebody would basically be saving in a bank, and if he wants to increase his savings from X to X plus Y, the bank will be, okay, fine, X has gone to X plus Y, and it's not that somebody will tell you, okay, fine, I need to give you another cover of Y to take care of this amount that you will be adding. It's not as seamless as the way guys have been doing in other industries. Think about claims. Again, benefits are so rigid. They are not flexible, dependent on the exposure, but also dependent on what somebody will really need to pick based on his needs. And even in terms of assets, and this is somewhere that you'll be able to see that assets and liability, particularly on an insurance setting, is something that is quite difficult, because we want to align the resources that you have as a company to the liabilities that you might experience. And in this particular case, then you need to kind of look at ways in which your claims that will be coming your way will be commensurate to your assets. But on the other components, companies still have a very clear channel of finance. Most of these particular existing insurance companies have a very good financial system and with right knowledge within finance. They have areas of, they deal with areas of capital management that is well managed, but also in terms of human resources, they have the right resources in terms of the personnel that they need. But maybe for you to think about innovating for scale, those are the I would say the 8 areas that you might need to think about as you also work around your business models and the solutions that you want to bring to the fore. I want to pause there and maybe see whether there is any question before I go to the next slide. I want us to be as participatory as possible. I don't like having a monologue. So any question?
Yeah, you mentioned, Elias, that... Go ahead.
Can I talk?
Yep.
Yeah, so you and I think in the industry understand some of these issues, but to what extent is the industry prepared, to engage with some of these innovations that is developing in the ecosystem? I think the timeline should be too embracing some of these changes, and I don't know how motivating it will be for insurtech to be able to look at those 8 areas that you mentioned.
Yeah, so there are 2 things that maybe I would mention around that, and I want to bring this particular analogy. I don't know how many people have read a book entitled The Innovator's Dilemma. And that's basically what questions you're bringing into perspective. Is an innovator, and this particular innovator is having some dilemma on, okay, the incumbent is hell-bent on this, but myself as an innovator, this is what the industry needs, and we need to think about it, and we need to kind of see whether it works. If you kind of go through that book, there are 2 important aspects of innovation that they kind of bring out. There's one innovation that they talk about, sustaining innovation, and also there's an innovation that we call disruptive innovation. Now, those 2 innovations are totally different, and for an industry that is currently existing, they tend to do what we call sustained innovation. It's not that the industry is not innovating at all. It will be totally wrong for us to sit here and say, okay, fine, the insurance industry and the current incumbents are not doing anything in regard to innovation. They are always trying to improve in terms of their processes, in terms of their products, and also in a way that they sustain their customers. And that's why we are talking about sustaining innovation, whereby they're not really looking at getting into a new market niche and changing the perspective of how the game is played, but they are looking at, okay, fine, who do we have already, and how do I continually make them happy? So in this particular case, whenever there is anything that they are asking for, we'll kind of develop, and in that, then they kind of sustain their customers going forward. Now, from the disruptive bit, is that you're looking at, okay, fine, this is something that is totally non-existent. I'm going into a group of people that haven't been covered before, or haven't been maybe no one has approached them before, and in terms of that disruption, then you create a new market and a new niche. Now, once you get in there, then you start getting, because again, if you get a new market and a new market, a new niche of customers, there's one thing that happens with these customers. One, they're not highly demanding, and that is where the difference is from sustaining innovation and disruptive innovations. From a disruptive innovation perspective, these customers will not be highly demanding. Because also they are new into the game, and they are really expecting what you told them that they would do, but they wouldn't really demand much. Totally different from somebody that you've been providing a product before. He already knows, and he will be more demanding. So as you go through the disruptive innovation and you are getting new customers, new market, new niche, then these customers start gaining experience, and that's why you need to kind of in a way continually bring them to that level whereby they start to become more demanding, because you don't want them to be as least demanding, because as they become least demanding, then they can easily fall out. So that's why in terms of disruptive, and if you draw this in graphs, I wish I could draw this, you'll be able to see that the disruptive innovation graph starts below the sustained innovation. As time goes by, it surpasses the sustaining innovation and goes beyond it. And what happens in that particular case? A new customer, a new company, a new innovative company, or an insurtech will start from a very new niche of customers. As he grows his innovation, it will reach to a point whereby it will hit the sustaining disruption graph. And then that's where now an innovator, an insurtech will now even take the customers that were previously with an incumbent. And that's how these innovations work. So it's important to think about the niche, not thinking about these particular companies, or it's good to think about them, because at one particular point, these graphs are going to intersect and pick these customers and run away with them. But also, you don't want to kind of start from that particular point whereby these two graphs do intersect. You need to start from somewhere below, whereby you are creating something new that changes the way clients view or experience a product or a service. And as you grow that, then it hits the sustaining graph. And then these most demanding customers that were with an incumbent will ideally say, okay, fine. Even if this particular company is small, I like it because they can sustain my demand or my need going forward. So that's how I would basically reflect on that. I don't know whether there are questions around it, but again, the innovator's dilemma is something that is good to appreciate. That, okay, fine, how do we move from here? And what will be the thinking of incumbents, and how then do these two graphs intersect, and which particular graph do I really want to run with? But most of the time, I've seen also some insurtechs are basically trying to run through the sustaining innovation graph, which basically will not enable you to gain scale, because scale is not only acquiring new customers. Scale is whereby you start on a totally new market, but as time goes by, the most demanding customers will see the reason why they can also move with you as a company or as an institution. And that is why then we talk about scale is all about moving to the new markets, but also being able to get some appreciation from an existing client's perspective on what solution you've in a way provided. Let me pause there and see whether there's any reaction before I proceed. Any reaction?
I was going. You mentioned that there's more innovation that you see in the front office. Do you have a hypothesis as to why that's the case? Why there's more in the front office than in the middle and the back office? And connected to that, do you see a demand from the insurance industry for more innovation from maybe startups like us in the middle and back office? Thanks.
Yeah, so the reason why there's more innovation in the front office is because I usually say it's the easiest line of defense to kind of pick through, because it's easy to ideally get and develop an app that will be used to onboard customers. And even if you look at it from an innovation perspective, even from the market perspective, particularly in Africa, there are various ways in which you need to develop maybe your apps to acquire customers from the front office. You might need to maybe come up with a technological app, or maybe you develop a USSD, and even you can decide to go a cake, whereby in this particular case, you provide some tokens to these particular people as a form of acquisition. Now, the rubber meets the road when this particular person will come to you and say, okay, fine, look, I want to see how tangible your product is. And that's why there's the big red on the middle office, because the tangibility perspective becomes a very hard area to prove after you've kind of acquired the customer through the front office, because the front office is all about registering, and that's it. But what really happens after this particular person maybe encounters a loss? How quickly can it turn around, and how quickly can you be able to ensure that you don't really ask for more information beyond what you did ask from the front office at that particular front office level? So that's why you will see that, okay, fine, there are so many innovations around the front office perspective, but again, from an insurance an insurance side, an insurance company is usually created to pay claims, so they should focus more on the middle office, but that's not where everyone wants to also focus on. We kind of go with more easy front office type components. Now, why is that particular demarcation? Because in terms of customer centricity, there is a very elongated process between the front office and the middle office, particularly when a loss occurs. So as an insurtech, can you easily bridge that gap? Can you easily reduce that gap between the front and the middle office, and ensure that the middle office is as seamless as possible, whereby the client doesn't really need to be taken through a lot of processes and requirements as maybe as in the past, and maybe based on some product that I've seen, you'll say, okay, fine, this particular product is being sold by the app, but once the claim, you start thinking about a claim, even as an insurtech, the first thing that comes in your mind, okay, fine, what documents do they really need to submit? But you don't think about, can I use, say, artificial intelligence or sentimental analysis as an insurtech to check whether this particular risk really materialized? And this can be done. Say maybe you offer death last expense products, and it's basically sold through a structured group, whereby all these particular persons are in a group. They pay money through, say, mobile or maybe they kind of just use USSD to pay for that. But when it comes to claim, why should you again ask for documents? Why can't you do some sentimental analysis? Is it possible to collect information from different sources? Maybe as one of the things that you'll use on onboarding is, say, okay, fine, give me your Facebook ID or Twitter ID or a social media component, and from there you can run quick sentimental analysis on the feeling of this person, people feeling great about him on a particular day, or sad, because if everyone is basically sending messages of maybe condolence or a message to kind of give heart a particular day, then it means that there must be something wrong with him. It must have been a death that has happened, or maybe you get that people writing on someone's page, R&P. You don't really need to go and ask his family members, please give me a death certificate. So ideally, how do you change the middle office? Sentimental analysis, AI, smart contracting, and all that is something that we need to start thinking about. But importantly, is basically addressing challenges. And when you want to address challenges, I actually use this analogy of taking a purposeful detour. So we know very well that we have a challenge, and the challenge in Africa is low insurance penetration. And what contributes to low insurance penetration? Talk about perception. People don't trust insurance. There's distrust, right? And what causes distrust is a lack of payment of claims, or if claims are going to be paid, it will take time to be paid. So you can basically go and say, okay, fine, let's react to this particular challenge. And what you do is, like we say, fine, we'll want to, in a way, think about maybe reducing our payments, say payment period from say 90 days to 45 days or something like that, and say, okay, fine, we've kind of given a response to this particular challenge. But the key that we need to do is basically we need to uncover the existing reality, whereby one, some of the time the products are not properly priced. Secondly, the information that you collect will not in a way help you to even deal with the claims payment, because maybe you did collect the information that you can easily turn and use it for claims payment, rather than you might need to maybe ask for more information. So by taking a purposeful detour is basically breaking down that particular challenge into some different aspects that will be able to enable you co-create new ideas and new ecologies over the problem that is there. Then from there, then you come up with a response that will basically address that particular challenge. So sometimes we quickly run into creating a response rather than basically breaking that particular challenge into mini problems and kind of asking ourselves, how then do we solve these issues? And that basically enables you to gain the right scale. So if you want to gain scale, it's not about an ordinary reacting cycle, but there is something that I usually say we need to take a purposeful detour and basically even further uncover the existing reality. And that can be done through R&D. It can be done through a number of discussions with even the customers themselves, and looking at how then they will be able to get the rightful impact when it comes to the challenge that they have been facing as a core, maybe as customers and so forth. Maybe there's a question before I get into this.
Hi, Elias.
Yes.
Sorry, Siania. Sorry. Yeah, I think like one of the key challenges that, in my opinion, and just from what we see within the insurance industry, is that the existing insurance companies are just too rigid and operate on legacy business models, right? Where they actually do not embrace innovation. So you find it very, very difficult to try and work with an insurance company. So there are very few insurance companies that embrace innovation. In terms of the work that Africa is doing, especially on the regulatory framework, is there a key aspect there around accelerating some of the regulation in certain markets to enable new license categories, as an example, so that there's less dependency on partnering with an insurance company? Because I think a lot of insurtechs, obviously, you want to do so much, but because of the regulation, your hands are tied behind your back, and therefore it creates a dependency to work and to partner with insurance companies.
Yep. Yeah. So I think that's a very good question, and there's need to really look at it broadly. You're saying, okay, fine, is it possible for the insurtechs to go to market and basically create that disruption that is necessary for creating the change. At the same time, I know the regulators also think about just think about the market systems. How do they contain a failure, and what happens to the credibility of the financial system when this particular failure kind of materializes? I want to answer that question as I go through this slide, and we talk about a number of components that I know the insurtechs would be focusing on, and insurtechs would focus around accessibility. Like, let's go in there, let's give traditional channels a run for their money and create alternative channels that would increase inclusion, but at the same time reduce the limitations that we have within the sector. So that would be the first way, easy way to get in there and start creating a change. Then think about credibility, and that's why now you'll be able to see that the insurance companies will always think about, who do we want to partner with? Do we want to put innovation or money to support innovation? Another thing is that, you know, innovations are not things that you'll not be able to know whether you will manage as a company, because most of these particular companies are like, okay, fine, we have very tight budgets to even think about innovation. The only thing that we can do is kind of make the customers that we're having a bit happy. Can we maybe make them happy by 3% or 5%? And most of the time, then the way you make customers happy as an incumbent is through price. And that's something that mostly they do. But maybe as an insurtech, you might think about, okay, fine, I want to increase credibility, maybe knowledge, insurance knowledge, maybe just ensure that we don't have sales disputes in terms of mis-selling. Customers do understand what they're basically buying, but also in terms of the claims disputes, whereby everyone is aware that, okay, this is a claim that I need to make, and these are the areas that, these are the documents that are needed for those particular claims. Now, think about the business models. Most of the business models are not looking into customer needs, right? And one of the key things that maybe it's good to mention is that we always try to think on behalf of customers as insurtechs. We don't allow customers to shape their products or to shape their products within their needs. Issues around technology integration to these business models, issues around channel management. You want to manage your channels of distribution, but also issues around profitability. So why don't insurance company run for ideally pushing for innovation? Is profitability. They're looking at, okay, fine, if we put this money in this particular process, will it really work, or will be reducing our profitability? Now, that's why also by just engaging, that they're not really engaging the insurtechs. Issues around market environment is something that also you need to think about as an insurtech, right? The economic environment, maybe your product can easily be wiped out by any changes within the economic environment, right? How then do you address such issues? How does your product relate to the economic environment? Is it highly driven by the way economic environment is moving? Issues around competition is something that you need to think about. Is your product easily replicatable? Yeah, because assume that today you've done your product X, and you have another company that deals with the same and would want to quickly copy that, and due to the resources that they have, they might not really even wait. They'll just go into the market and take the entire market that you had when you are starting your insurtech. Issues around regulatory environment is important. So are we only creating a license, or as regulators, that will kind of put the market more into market the instability, right? Because again, you have to maintain the credibility of the market systems. So with that, when you talk about different lines of license and different forms of licensing, what these particular companies will be thinking about is that it should be something unique that do not just offer competition for the sake of offering competition to the other incumbents. And if you remember the two graphs that I talked about, if you start it disruptive, you'll get to that level whereby it will just be managed in terms of that line, sustaining innovation, joining the disruptive innovation. Also think about technological revolution. Tech is changing daily. The tech that was used previously is not what is currently being used. How is your solution kind of relating to the tech system? Yeah. Are you ready to manage technological risk? Because assume that you have gained scale, then cyber attack happens and this information goes out there. You will not be able to gain the rightful scale. At the same time, if you want to gain scale, you need to look at the technology credibility in terms of the ability of that particular technology to withstand the growth going forward. In terms of customer demands, the needs always change, right? Are we really providing an opportunity for the also insurtechs to understand different needs of different players at different times? Experience, the service experience, what do they get what do basically these customers get from you as an insurtech? Now, most of the time we think about these as economic value. You think about, okay, for my customers, I want to give them economic value. That means that if there's a loss, then they get a payout and that's it. But it should be more of an experiential value. Is it possible for an insurtech to measure the emotional value that somebody basically derives from a particular setting or something like that? So it's not only about finance, but also think about experience. What experience do you want to give to your customers? And are you able to measure that experiential value as an insurtech? That will enable you to get to scale. Customer behavior preferences. Are you able to learn the customer behavior preferences and basically focus into more of the customer needs? And with those particular preferences, then you can talk about differentiation if that need be. So I wouldn't want to dwell much on this in terms of the new entrants. I've kind of talked about this previously by giving an illustration between sustaining and disruptive. And most of the time, you'll get that most of the people that do tend to set up insurtechs or innovations are basically employees that have been frustrated in the past because they know what are the gaps and they have mostly nothing to lose if it doesn't work. But most of the thing is that they usually look at it working. So is it possible to find new customers and new markets, which most of the time, as it starts, it might be small and insignificant. But as you kind of look at make inroads, and then this is where now the disruptive meets the sustaining. So some scaling principles is that you need to, and this was mentioned by Zila, there's need to think about the needs. What are the customer pain points? Are you able to have a customer portrait? And basically look at what needs solving based on the unmet needs. And the second thing is seeing and designing for the bigger fit. Are you currently thinking about your solution, not only now, but what will be happening in 5 years' time? And that basically gives you the fitting process whereby now not just designing your solution for now, but you've already also thought about the future customer. Issues around strategic partnerships is key. Who are your partners? How do you partner? How do you drive those particular strategic partnerships? That's really, really important. Talent and learning is key. Most of the time, I think we don't learn or we don't really put some, I would say, time to also learn our challenges or our processes or or even just our product. So is it possible to continually learn and kind of grow talent? Then engage with the regulator, and that's important. I usually say there is a book also that I would recommend, 3 Cups of Tea. Again, here, engage, talk, have a conversation, have a cup of tea, and before the regulator finishes that cup of tea, tell him, can you have another cup of tea? And you'll be able to kind of indicate what you are doing as an insurtech. Have confidence to identify and ensure that you have appropriate management on innovation risks that can wipe you out. If you don't manage innovation risks, then it becomes a very big challenge, particularly when you lose the key risk persons or the key man risk, or in terms of certain areas, but also just managing issues such as cyber risk. I tend to put funding at the end because everyone wants money, even if your solution is as bad as anything. But you'd still be obliged to say, okay, fine, for me to gain scale, I need money. Money can scale anything, including the things that are not innovative, because you can just go there and kind of give them something that would make the customers to join you, even if your product is not as innovative as possible. So ideally, as also we think about funding, let's kind of divert that into whereby you'll be able to see from the funding perspective, should be maybe the last component that maybe we need to be talking about. But importantly, again, funding is important for scale, but you can basically put funding into anything, regardless of whether it's creating the rightful change or not. Just to kind of now think about ending, I usually talk about one-hit wonders, right? And I'll focus on this on 2 ways, whereby you think, and one of the key things that I would say is that scaling requires focus and commitment to the current operating model, but also it should be grounded on increasing the variance of ideas and experiments, and basically still challenging your status quo and thinking and acting in fundamentally new ways. So don't be a one-time hit wonder if you want to be somebody that will be to create the impactful change and to create the scale that is necessary. So it's important to basically balance the past achievement, but also demonstrate that you are able to explore the innovations for tomorrow. Even though this is something that becomes a very difficult balancing act going forward. I don't know whether there's a question at that before I go to conclusion. I think we are basically running behind schedule, right? Timekeeper.
No, I'll have about another hour left in your time.
Oh, great. So I think I'll have a longer conversation with the team. So maybe I just want to know whether there's a one-hit wonder here. Like, if this does not work, then you are doomed, or you are also continuously innovating just to increase and challenge your current thinking. right? Silence means that I can proceed. So maybe let me pause here and maybe from what we've already discussed, and maybe I'll want to hear from each and every participant to them based on their current exposure and the experience. What basically drives scale to them? And maybe you can look at it from your product perspective. Let me get the names here. It will be good. So let me ask who have Abdul, Malik, and maybe from the best quote perspective. Now you are coming in from the front office perspective. What does scale mean to you? And we've mentioned that it's easier to think about innovation from the front office perspective. How are you looking at this beyond the front office? Are you likely to venture into the middle and the back office? Malik?
Yeah, hello.
Hello.
Thank you. So, ideally, what scale means to us at Best Coats, I'm speaking to our experience. There's the number of data that we have to be able to use. That is what we look at scale. Because to us, if we have a lot of people buying and a lot of visitors, how are they using our portal? It gives us data to be able to look towards other channels as well.
Yeah, so I talked about also the continuous bit, right? How do you continuously innovate?
So
given that right now or already you already have like a platform and you are managing that, how do you ensure that balance for continuous innovation?
So like I said earlier, we look at the markets. Did what we did it work? If not, what is working in the market? So like I said some time back, we just launched our agents portal. That was an innovation that we did from what we previously had. Even though we've not moved far away from it, we realized that the agents' trust in Ghana was still there. People were still moving to agents. So we decided that why not give agents the platform to manage their clients, like insurance agents.
Okay.
Yes, so that is one innovation that we did. That's at the beginning of this year.
All right. So there is that particular component of scaling that you're looking at it from the continuous innovation side. Maybe let me jump to Newton. Based on the solution that you have, what does scale look like?
Okay. Yeah. Yeah. Based on our own solution, it's all about reaching more people and actually making the figures out of the scale. So it's all about profitability. I think basically my idea about scaling actually changed after the last session we had. After looking at what the response from the speaker, he said actually scaling to other markets while you've not exhausted your targeted market is actually not a good idea. So at that stage, where I came to realize scaling is all about exhausting your target market, become profitable before you can think of moving somewhere else. So scaling is now my mindset about scaling is all about making profit within my target market before any other thing.
Okay, so to you, scale means that there should be some form of profitability based on the investment.
Yes, there should be profit. There should be the profit aspect, the profit aspect of you talking about scaling or thinking of scaling. If you see if there is no possibility, then the scaling you intend to actually get engaged in, it's not worthwhile for the business itself. So I look at scaling now more of profitability.
Okay, Siani, any reaction? Now we've seen numbers, profitability, and I'll kind of react on all that as on my other part of discussion, but maybe Siani, scale.
Yeah.
To you.
Yeah, I think for me, you know, when I look at scale, I always like to look at it as you know, profit for purpose. And by that, one is, yes, as a business, you need to be profitable, right? In terms of sustainability, to sustain it for the long term. But at the same time, there's this other component that we need to always be mindful of the social impact that we're making with our innovations, especially in the emerging markets and emerging consumers. So for me, it's really anchored around profit for purpose.
Okay. Yeah, social impact is something that Sian is mentioning, and that is predominantly very important, because we want solutions that will create a change around the continent. And ideally, that change should be created through social impacts. And from there, then you can easily convert maybe customers that were previously on a particular trajectory to this new, because they are seeing the social impact side of things. And this is where by now, from an insurance perspective, for scale, you might need to think about added value added services. So say that you are providing health insurance solution to a group of people in a particular community. So other than just being there and basically offering them with the product, are you able to maybe organize, say, productive health sessions with them, where they can learn and they can just feel, okay, fine, this is something that, yeah, we are working on together, or with this particular company. So it kind of now become a community-based value added services or something like that. Let me pick on Mark. Mark, any reaction on what scale means to you, and how you basically change your focus and make it more scalable?
Yeah, in terms of scale, for me, I think it has more to do with access to markets, understanding the market in which you want to enter, and then trying to meet up the pain points. Those are the key elements for me. I believe if you are able to understand the market in which you wish to enter and take care of the pain points of the market players, it would be a good place to scale. It would give you a bigger space in terms of scaling your product. Yeah.
Now you brought the interesting version of the market. Now my question would be, would you want, and what customers do you think give scale? Is it already established? Is it so to you, if you go to the market, and you mentioned the market perspective, from your product perspective, which market segment do you focus on?
Okay. In terms of our product, we are looking at all insured. So from non-life through health, through pensions, and then through life. So for us, like I was mentioning, the pain point has been the claim process. Okay, and so what we have done is to sort of try and simplify the claim process for all insureds. And what that gives them is the fact that they would not have to deal with a lot of apps. Besides that, it also looks at the untapped market for me, which is more of the underserved communities, which constitute a lot of indigenous people who may or may not have had higher levels of education. And so you need a blend of some local aspects, and it's been a pain point in our markets in the past, because it so happens that for tech products, it's people that have had some level of education that would have to use apps. Okay, but what we are trying to do is to demystify that and make it very accessible to either half educated or fully educated people. So, like I said, as pertaining to my point, we first try to understand the market. The market do not just comprise of educated people. It also comprises of undereducated people. So how do we meet these people, both these guys and then those who are educated? So that is what we have tried to do in terms of understanding the market and the pain points.
You've introduced something that we call the missing middle, and that's something that from an insurtech perspective, it's important to think about the missing middle. That particular point that demarcates a client that maybe even if you do anything, even if you try as much as possible, you will never get covered, because it will be more like a safety net kind of a client. But kind of the missing middle between the more established customers to these customers that are maybe semi-literate, they do understand a bit of what bankers do and something like that. But when it comes to insurance product, they are not really concerned. So yeah, let's think about also for scale, for purposes of scale, our missing middle, and kind of really creating that peg to hold on to the safety net to the high-end customers. But I think the missing middle will be able to assist in terms of pushing for scale if necessary. Let me run to Doreen. It's Dorian. Sorry, I'm calling you wrongly.
No, actually, your first the initial gauge of how to do it was correct, Doreen. I think for us, in addition to what's already been mentioned and the numbers, reaching more customers, being able to have more revenue, in addition to that, I see that as we are scaling, we are also able to solve a bigger piece of the problem for our customers. So if I can give you an example, initially we started a pilot with an insurer in the Philippines, and they said their farmers are looking for a product that covers rain, excess rain that's often in the form of a typhoon or floods, sorry, but also excess wind speed, which is a typhoon. And just to get things started and not to be too complicated, also with the regulatory approvals and things, we started with only the rainfall product. But now we are scaling and we can actually add wind speed. And so it covers a bigger part of the problem that they're ultimately the end user, the farmer has. So I think that's another aspect of scaling for us, to start simple, but to expand also our product offering to cover more.
All right, I like that. Start simple, expand the product gathering, and I want to give you an example. And these are real example of two companies. And the issue was that the company was good to respond, while the other company was not really good to respond, particularly to customers. Now, I know all of you have computers, right? And most of the time when you check your processor in your computer, it's either Intel or if it's not Intel, it will be Celeron or something like that. The higher versions is basically Intel. Think about the 10th to 8th generation types of processors within these machines. Now, Intel is a company that does the processing, these computer processors. And when a new company came in, this company was Cyrix. Cyrix was also a company that was producing computer processors. So Cyrix came into the market. They wanted to go to the untapped market because ideally computers were really expensive in the past, and for somebody to have a computer, you are really doing really well. Now, when Cyrix came into the market, they said, okay, fine, we are not going to compete with Intel in terms of their clients and what customers that they have, but we want to go to the lowest end, whereby they said, okay, fine, let's go to the smaller customers that will require a processor that their laptops is only for maybe writing letters or maybe dealing with Word documents. There's no very complicated issues that will require a lot of computer process. So in this case, then Cyrix came up with a product that they were calling AMD. So they came up with a very cheap microprocessor that would be used on cheap computers. And AMD started producing those processors. Immediately, Intel realized that, look, if we are not careful, these guys will basically start from the lowest end. Then they will easily graduate to, say, these higher versions of Intel. So Intel immediately came up with a new product, and this product was called Celeron, and that's how Celeron came in. Intel started producing Celeron, a single processor chips to be produced for the customers that wanted to, for those customers that didn't have enough money to basically buy Intel computers or something like that. Now, this was quite different from the likes of Ford. They have car manufacturing in the US, and Toyota. So when Toyota went to the to the US, they didn't want to compete with Ford on the high-end vehicles. So they went in there and started producing lower version, cheaper vehicles for the purposes of maybe just going to this market that, look, this Ford and the team has not been going to. So over time, people could not trust these very cheap vehicles, but they just started buying them. So as they bought these cheap vehicles that were just they were not very, I would say, luxurious and such kind of things, they realized that, okay, fine, these vehicles could move. These vehicles had some level of engagement, and in that particular case, then the people started trusting more on those lower brands of Toyota. But as time goes by, Toyota increased their brand and kind of start producing high-end value cars. And that's how now Toyota came in and took over the market share of Ford, because Ford was more aligned to higher version, high valued vehicles. But as Toyota came in, they started from low, and currently they do produce some of the high value end vehicles that are currently used in most parts of the US. So it's important to think about it from a Toyota thinking perspective as an innovator, because look, you are going into a new niche, but also think about basically essentially upgrading that niche to the customers that are currently maybe being held in another maybe level of a customer. So react the Celeron way if confronted, whereby you can basically put something to enable you scale and to manage your business as a brand, but also think about going low and attacking from maybe thinking of this from the Celeron perspective. Chile, I don't know whether there's any question or any other person with a question before I proceed.
I posted a question from Newton in the chat box.
Okay, it can be read. You know, some of us are trying to multitask.
Okay,
Somebody can
so
read
he
it?
said since the main focus is insurance penetration, which of the three areas is of priority for innovators, or should innovators concentrate on in this our age? Front, middle, or back office?
Right. So we basically want to create resilience, right? And there's need to basically, the first thing I mentioned is to reduce that particular gap, but also be wary of the pitfalls, whereby if you are doing it from the front office side, your innovation will hit a snag based on the perception that the customers already have on the middle office. So assume that you've kind of given a very good solution that is sold through very innovative means, but as the process comes for claims, then it basically goes back and maybe looks at requiring all the other processes that are archaic and traditional to be followed. So in that case, even if you are on the distribution and on the front office side, but you can be lagged behind by the middle office. And again, the reason why middle office might lag, because again, for the middle office side, there are other programs or products that might be necessitated from the middle office side. So for instance, risk taking is something that needs to be thought about from the middle office side. And it's good to think about how then, if maybe the middle office and the way risk taking is undertaken through the incumbents, how does it really work for the innovators? So I think that is something that we might need to think about. Now, in terms of the insurance penetration, I think we need to increase resilience. And for us to increase resilience is whereby we get more people getting some form of they're covered. For those guys that are currently uncovered or underserved, it's important to get them to the fore. And the only way to pull them is basically working closely with the regulators, but at the same time, the industry associations, just to ensure that, look, we are gaining the rightful change within the market. So resilience has to be created. Resilience will not only be created by maybe focusing on the front office, because I think what we talk about accessibility goes just beyond acquiring a customer. Accessibility even goes towards also managing these particular customers. So are we able not only to acquire them, but to manage them in a way that they will be able to really indicate that there was value in terms of managing these particular processes. I don't know whether there's anything that I've missed, but I would say, look, for resilience and scale, don't only think about accessibility, also think about customer treatment and customer value. Any question? Any reaction?
Elias, I want to ask, when or how do expansion of businesses affect scaling? I mean, we talk about new things, innovation, change, add, subtract, put something new. Can scaling also just means expanding old products and initiatives and doing it very well?
Yeah, and that's why I mentioned when we talk about sustaining innovation is whereby somebody will look at what they currently have and say, okay, fine. I just want to maintain what I have and just want to kind of, in a way, make sure that if this particular client was giving me $100, he has some confidence of putting, say, $150 to this, or maybe to what he really wants to get from this particular institution. So in that particular case, you would be able to scale in a very sustainable way. But the only challenge is that in case maybe there's a disruption that happens across the ecosystem, then it can easily take away whatever you had scaled to achieve. So expansion is one form of scaling, but expansion is ideally just increasing it by a particular percentage. And in this way, you are also just looking at people that are already in the game. They are already within the market. So maybe you can shift by acquiring other people's customers, not really by doing anything very innovative or something like that, but just by adding one or two components that would create some confidence into the market. Yeah, so that's possible, but not sustainable. Or maybe not, it can basically move. Expansion can move from point A to point B, because your competitor can learn some tricks on what enabled you to expand, and by deploying the same, that shift can be experienced rather than looking at it from a disruptive side, which basically gives it a lot of cognizance on terms of a disruption.
Thank you, Elias. Someone asked if you can share the title of the book you mentioned.
Yeah, so the book is Innovator's Dilemma. You can Google the Innovator's Dilemma. It's very interesting. Good read for innovators, as long as you are an innovator. Maybe you will realize that, okay, fine, I need to stop this business and maybe do something else. But I hope that we will not give up. We'll always think doing things in a new way. Now, one other thing that I would say is important for innovating to scale is basically getting feedback. I would say one of the key things that maybe, in a way, push us not to take our products to scale is that we tend to have our ideas and our solutions and not really do what we call bootstrap that with other people that would kind of critique it and tell you, okay, fine, look, this is nothing, right? You have to maybe change 1, 2, 3. It doesn't mean that you need to change everything or to make a change, but it basically gives you some opportunity to self-critic your innovation and look at it differently. So don't be somebody that will not need somebody to kind of poke your idea and kind of, in a way, create some holes out of it, because maybe the hole that has been created will enable you to even modify and create a bigger component for support or something like that. So allow criticism. Always call for people to let you see what maybe you're not doing right. And in a way, you'll manage to address some of those challenges. Right, so let me then look at this. Our conclusion is that now InsurTech requires transformation, and we know one of the key things that we'll be talking about is that, look, this should be highly policy-led industry, and again, it's true. Insurance is highly law-driven. Also, banking is law-driven. But even if we are dealing with an industry that is led by a number of policies, really placing the customer at the heart of everything changes the way we look at innovation and the way we look at scale. And the reason I'm saying that is that the customer should be at the heart, that the customer should be at the heart of acquisition. The customer should be at the heart of making these particular benefits, just to ensure that the customer is not left behind, because most of the time customer is always reflected at the start in some cases. We need to implement new and innovative approaches to transform the way we do business, and in this case, disruptive thinking is what needs to be done. Think differently, do a purposeful detour, don't just react, but take that detour, uncover the existing realities, and start co-creating new ideas and solutions that will support the way you manage some of these innovations. There's also moving beyond the comfort zone, and this is a thing. Most of our innovations have gone to the comfort, like you kind of go to the balance sheet and look at, okay, fine, which product is highly moving in this market? Okay, fine, say it's motor. Okay, let me do something around motor. If I do something around motor, I'll be able to get customers. They might not be new customers, but ideally, with being in a comfort zone, it doesn't enable you to stretch. So for you to scale, you need to move beyond your comfort zone and think about these new markets, build a new customer-centric architecture, and design those particular products. Another thing is leadership. Scale cannot go without proper leadership. And in this case, it must be transformational leadership, whereby there's a team that is able to embrace change in a very urgent and rapid way to benefit to benefit from the opportunity. So embrace change. It requires leadership, and also requires, and whenever there's leadership around it, then it will require some resources. Continue thinking about working in partnerships. It's one way to gain scale. And more importantly, think about strategic partnerships that I did mention earlier. Who are these partners that you could work with, right, to basically provide the change that is needed to create this InsurTech industry to be a transformational industry? So are we looking at more partnerships? Are we working towards more partnerships? Are we also ready to basically do away with the partnerships that are not also working? So how then do you manage these partnership arrangements as an institution? Any question on this?
Elias, I wanted to ask, what role will competition play? I wanted to ask a question on competition and partnership in relation to skill.
Yeah, competition is important, and the reason why I said competition is important, because again, competition enables market actors to look at the efficiencies, market efficiencies within an ecosystem. But now, what really makes or creates a big problem that kills scale, and this is one of the reasons why also if you look at the insurance penetration in Africa has been going down because of what we term as negative competition. And what does never negative competition do? It's based on price wars. And that's what I wouldn't want to see happening in an insurtech ecosystem, whereby immediately we see as these particular products start gaining scale, and there are a bit of similarities around them, then competition will not be in terms of quality of service and delivery of service, but it will be more on, say, the price. So if InsurTech X is offering $30 per month, InsurTech B, I'll be offering $23 or $20, right? So that basically means that customers will shift, because it's not an issue of quality or something like that, but that's what it is. It is what it is, whereby now competition becomes quite negative. So competition is important. It can increase the quality of service. It can even create a new niche of a market where maybe the current market was not thinking about. But also it can be negative and basically wipe the existing innovations that are already there, whereby now these innovations will just be competing on things such as, say, price. Yes, any question? Silence. So let me then put this as a parting shot. Is that scaling can be easy, but at the same breath, it can be very, very difficult, because scale will depend with your vision as an innovator. Maybe to you, scale will mean that you need more funding, or maybe scaling to you will mean that you need to get rightful partnerships, or maybe scaling to you will mean that, right, you get into a new market or new customers. But overall, scaling requires you to think about the customer, having a very customer-centric model that really is able to be pulled by the customer wherever they want their solution to be. But at the same time, kind of give those particular customers some flexibility in terms of either increasing or reducing. The same thing that I did mention with some examples I gave between Cyrix and AMD microprocessors and the other processors that we've been talking about. So scale is important, and scale is all about the innovator himself and placing the customer at the heart of everything. That's what scale is all about. And once that happens, then all the other facets that needed for movement can be achieved. I want to stop at that, and maybe if there are one or two burning questions, I can take that. But generally, I think it has been a good session. We need to basically move beyond our comfort zones, think about our solutions differently, and allow for critique. Let us critique a solution and tell you, look, there are these areas that you need to think about. Right, thank you. Let me know whether there's 1-2 questions before I take it back to the Emma or Florence or anybody that would want to take it from here. So 2 last questions, or maybe there's a question that I didn't answer. I'm happy to answer.
Okay, I would like to come in.
All right.
Yes, so you made mention of we should actually our innovation should be geared towards coming out with solutions that are unique, which are somehow different from what the ordinary insurer is provided to the society. But now the question is, as startups, most of the times we look at products where we can start and be sustainable before we go into those products which are differentiate that unique in their character, and then we take it from there. So how do we reconcile being with all the difficulties startups face and go into launching a solution that might actually be very difficult to manage at a startup stage?
Yeah, the reason why I'm saying that is this, you know.
I don't know if you understand my question.
Yeah, I understand. The reason I'm saying that is this. Look, assume that you are trying to provide a product that is currently being provided. And again, don't take it as a criticism. Look, assume that maybe you are just providing that product maybe through a distribution channel, which is okay. That is an innovation from you are basically providing a distribution innovation, but assume that you are a product innovator, right? And you kind of just went and took a product that is currently being provided by an incumbent and want to basically distribute it through your channel. Do you know one thing that incumbent will do? They have the muscle to change the price, right? They can play with the price wherever they want, because look, I talked about they have the capital management, they have the right resources, and they can get what we call the law of large numbers, the ability to bring all these guys together and kind of still diversify among that risk. That's a risk that maybe an innovator will face if ideally is the same product, and your way of competing with them will be much thin, because you have very, very few things of doing, because in Africa, price is everything. It doesn't matter if today you told people that I'll be delivering bread at your home at, say, $5, and somebody tells you that you can pick bread from my shop at $4.5. You know, people will at that, people will say, okay, fine. Why should this person bring for me bread at $5, yet I can go and collect it at 4.5? You know, price is everything. And if your innovation can be fought by price by any other competitor, then it will be very difficult to scale. And that's why I say, think about it from a very new niche and or on a very least demanding customers, and kind of grow that particular customer to that particular point whereby this customer will not be thinking about, okay, fine, do I really need to basically go and get bread from the shop, or better that guy can just bring it to me with that extra cost, because you've kind of grown him through that particular process. And that is easy to scale than starting with a very high demanding customer. And that demanding customer, the incumbent can still manage him on a number of ways that he can shift anytime. So that's what I would say. Now, and that's where the fear is, because somebody will say, okay, fine, but I don't have the resources to test this. And that's why there's we are currently talking about things such as a sandbox, where you can be given an opportunity to test and see whether these things would work, and still iterate your product as much as possible, and kind of in a way tweak it until you get the right balance on your innovation on a controlled setting. There's a hand raised, or maybe Newton, you have some comment before we go to.
No, I'm good. I'm good. I think your explanation gives a lot of sense, makes a lot of sense.
Festus? Festus, maybe on mute. Festus, your hand is raised. I don't know, it's me only. Can somebody hear Festus?
No, I can't hear Festus. I'm sure he might be having network challenges.
Maybe
Festus, if you can hear us, you can type your question.
Hello, can you hear me?
Yes, it's clearer now.
Hello, can you hear me?
Yeah, we can hear you.
Okay, sorry about that. Yes, Newton, sorry, Elias, my question was got to do with the issue of failure. You know, as a business, as an innovator, you're trying to scale, and sometimes you come face to face with, you know, failure. From you know, your perspective, how do you deal with it to be able to continue that path of scaling?
Yeah, you know, no one wants to talk about failure. In fact, I think it's usually said there are various mothers to success, but failure is always an orphan, particularly in Africa. No one will just come out there and say, okay, fine, look, guys, I had this particular product, but it failed. And I want to give you an example. There was a very innovative product in Kenya. It was called Linda Jamii. Linda Jamii was being produced by Britam, and it was one of the best, I would say, inclusive insurance micro products that was highly innovative in Kenya. But Linda Jamii failed, and the failure was just orchestrated by the demanding customers, because when they created that particular product, the least demanding customers saw that this was an opportunity for them to get some form of coverage, particularly health coverage. But as the product kind of scaled, the people that started purchasing the product really started to anti-select against the product. So again, you see, scale, but scale that leads to failure because of the way customers looked at it as way of making money. So what I would actually say, how do you tackle failure, is talking about it. If you have failed, or if you think that this thing is failing, bring it to the fore. Let people talk about it. Let's see whether it's something that needs to be tweaked, or needs to be addressed, or needs to be stopped at that particular point. Because most people don't talk about failure, and maybe you've never heard about Linda Jamii in Kenya, and how much maybe that institution managed to lose out of that particular innovative product, because of the way they had perceived it. It's not the way maybe the way it was scaling and the way customers were coming in. It was not the way they had envisioned that it would transpire. So again, scale can lead to failure. It's not that you fail because of not gaining customers. Sometimes you can gain customers and you fail because of some nuances on how the market would react to your innovation. So we just need to be careful and think about these particular failures, and basically talking about these failures. I know most of the time we are concerned about not gaining customers. Like, okay, fine, I have this innovation, but it's not moving, which is much easier to deal with than failure that is orchestrated by many customers that are making you fail. Because again, maybe what was needed was that the product needed, as maybe the customers were growing, there was need to think about what we call about product differentiation. They needed to start thinking about differentiating their product because customers became more demanding, and maybe they might need to think about that. But maybe I need to answer the question around failure, whereby you are not gaining customers. Now, for that, there's need to discover what is making this not happen. Why you are not gaining customers? Is it because you are not really engaging these customers at a particular point, or is it because maybe we haven't really managed to address the customer portraits, right? Or have we not really managed to understand our customer? So those are some of the things that we might need to ask ourselves as we look at failure, and how then we address that is based on the uncovering the realities of why this particular failure really occurred. Because most of the time we don't uncover that. We just feel that this is a failure, then we just put it on the side and then pick another thing. Try, fail, put it on the side, but we never go back to ask ourselves, what were these issues that really caused this failure? Can we uncover this reality and co-create new ideas for future scaling if it's possible? And learnings is important. Let's share learnings. Thank you.
Thank you, Elias. All too soon, we've come to the end of the session. If you have more questions for Elias and Zila, please kindly send them an email. It's 7 p.m. And thank you, Zila, for taking